Hello, guys. How we doing tonight? Was feeling more of a chill vibe, so went for the slow songs. Hope I didn't put you guys to bed, to sleep. What's up, Matt? Very surprise PA review was the best way to put it. I traded today. Saw price was quite beautiful, but also was a lot of things, a lot of valuable movements occurred, and a lot of filtering was needed for today. So I thought, what best opportunity to go over price with the community as always with the PA review. So might be a little less people tonight, but we'll be chilling on a Monday night looking at price. I also do want to say something that I forgot to talk about in the weekly outlook. So for a lot of people who came here for the Rice Statistics app, and this is a lot for the YouTube recording as well, so bear with me, guys, that are present here live. Uh, I will not be sharing too much of approaches and ways to be trading it in the near future. Right now, I'm concentrating on making the app more complete, have more data available within it, and of course, working on the workflow. And this week, I will post a complete. I will do a complete Twitter post on the Rice Statistics account to make sure that our plans for the future are shared with the community and very detailed so that you guys can understand where we will be going moving forward. But I did want to say for more of the Rice Trading Discord for the community here that I won't be sharing too much of statistical approaches to trading when reviewing price unless if it is specific to that setup that I used. Right? I always say I love to be an analyst, but as a trader, I keep things simple. So hope I just framed that correctly for you guys to just bring clarity to the matter. But enough talking about Rise in the future, whatnot. Let's talk about NASDAQ NES. Looking at the daily candle, you might not expect what happened today, right? There was a lot of back and forth when you look at it with hindsight. But if you remain with our plan, what did we have? Well, we had SMT on the highs. Yes, of course. And there was SMT more recent as well, right? A lot of divergence between both. But as I explained, I disregard this SMT for very specific reasons. So I'm not going to start repeating what we discussed in the weekly outlook. But today we were looking specifically for longs. If we go down to 15 minutes and get our sessions up, which, by the way, I do want to give a quick shout out to TFO, his new and updated indicator for the session kill zone and pivots. I love the new updates he brought to it, and I will be sharing custom settings once I get more familiarized with it. Just for session highs and lows, it's a lot cleaner than the current indicator I use. So there'll be some changes. There'll be a small thread related to that coming soon. Just wanted to let you guys know. First things first, whenever we consider a day, we look at the very specific things, which is the current price action, right? I don't trade before New York, which means that before 9:30, especially on a day with no news, I expect 9:30 to be the injection of volatility, looking for either a 30 or 9:30 Judah swing. Well, in this very specific case, I want to consider the rest of the day, what happened up till now for power of three, very specifically. And what do I see? Well, I see that we have, of course, our Asia consolidation, which Asia has returned back to normal short term. Might see some huge ranges once again, but no more 200 handle ranges for a little bit, we hope. But now seeing this, you have a whole move lower. And once we combined our frameworks, more specifically the London framework, where you would look at the highest high and the lowest low of the London range, which comes to this, oh, wrong high, which comes to this for London high and this for London low, we can see a clear overnight Judah swing. So that whole framework confirms our higher time frame analysis for looking for higher prices, and moreover, we have SMT at our key time, right? Our overnight, this is where you'd anticipate a Judah swing to form on a daily scale. You have SMT between NASDAQ and ES, and I did not want to mark out this one actually. This one is for later. So kind of hard to see like this, but if I zoom in a little bit, a little easier to see, with Nasdaq being the weaker asset on the day, while ES did not manage to break this swing point specifically. And of course, there's more SMT later on in the day, right? There was a lot of back and forth. What did we do? Well, we formed a range, broke that range to then go retest our current range with SMT, and then go back higher. This is a clear consolidation. It's search and destroy, targeting liquidity above highs and below lows completely throughout the day. This is why it leads to a lot of opportunity, but you need to be able to filter these opportunities to know where is the high probability within these specific moves. And as we stated, right, looking for higher prices in this case, you'd be looking for at New York Open to go target London highs. And of course, after that, you have current high of day, which forms equal highs with previous day high. So definitely beautiful targets, very clear objectives when you look at it in this way with our weekly outlook. Very straightforward price action in this sense. But there's always more filtering needed once we go down to the 1 minute. Sorry. On this specific case, what would you be looking for at 9:30? Well, yes, of course, London highs, but more specifically, you'd be looking for a Judah swing. So for me, looking at longs in this very specific case where 9:30 just expanded higher, and looking back, we had no news where I could frame that our Judah swing was already present. And yes, we have our context from London, but I would still like to see 9:30 form some sort of retracement into our range without a need to break the current overnight low, right? But just some sort of retracement before considering too long. So even if this right here is a unicorn, this is not a trade I would consider just because the context was not already present, and also my main objective had just been taken. So in this very specific sense, this whole move, I'm happy you did not, Matt. I'm happy you did not. But for me, this whole move is just a missed out move. I can't trade this move because my context was not present specifically at the time and area I needed it to in price. So for me, that is just a move I cannot trade. I did want to be clear about that because yes, we were looking for longs. Yes, we had our higher time frame analysis telling us to go long. It doesn't mean I will blindly buy any unicorn setup. I need my context to make sense every step of the way and for it to align in a certain way for me to take a trade. And especially when I'm only trading the New York session, this is why it often leads to me trading retracements in the opposite direction of my bias. Because once our objective has been met, equal highs with previous day high, that is a very important point in liquidity. That is a point of interest where I will be looking to short above this level. This is where I believe a retracement can be initiated. And anytime we retrace on a daily scale, I always refer to the 15-minute range. In this very specific case, this was the range you'd be referring to, right? Just swing high to swing low, our most recent expansion. And I'd be looking for retracement to the first discount and efficiency. This has never changed. It will always remain the same. First discount and efficiency is my partial. I refer to the 15-minute range in this specific, well, my objective. I do name it as a partial in this case, but if I am trading a retracement, this is my objective. Why am I referring to a 15-minute range this time and not a 5-minute? Because this is intraday. My distribution was higher. Now I am framing retracements. I want to refer to my current day's range, which is from the swing point to this swing high. When looking at a trade specifically, I like to use the 5-minute for the partial objective, which if this isn't your first peer review, you know very well. Now looking at this, where's your entry? Same thing as always, you'd be looking for a unicorn. So once this level gets tagged, I'm only waiting for a breaker block to form. Our first breaker block was formed right here. Sorry, I saw a lower time frame breaker block in this. This might be a 15 second, 30 seconds. On days that are high probability, sometimes I tend to go a little more aggressive, go down to the 30 seconds, sometimes even the 15 seconds when I see price moving very quickly. But on a day with no news, especially on Monday, I would never consider going below the 1 minute. And that's just my personal approach. This breaker, when is it formed? Once we trade below this range. So from this point on, your breaker is formed. And I am looking for an entry. Where am I going to look to enter? On my nearest overlapping PD array. Where is that guy? Well, inverted fair value gap to the left. I looked for an entry on M3 chart, so I missed that one. That's unfortunate, Matt. The M3, as you can see, is not in my choices. I don't personally like it. A lot of people, especially people who trade inverted fair value gaps like the 2 minute, 3 minute, 4 minutes. Personally, I don't. I like to keep things on the simpler side of things. And yes, you see all these seconds, which, as I explained, I don't use. I do have some indicators that I'm working on to fix the seconds charts on, more specifically my key times indicator. So that's why they're currently there and have been there for a while now. Could have had a monster today. Yes, definitely. Looking at this, it is very straightforward. What do you wait for? Breaker to form. Next candle trades back into it. Let me just have the perfect alignment here. So next candle, you have a 1028 entry. Where would your stop be? All mechanical approaches to stop. You're looking for 3 PD arrays to defend your entry. That is how I like to think about it. But you're allowing for 3 PD arrays to get invalidated before your trade idea gets invalidated. And what do you have? You have inverse fair value gap. You have another inverse fair value gap right above it. And you have an order block. So that is a very tight stop loss right there. And would I change my stop? Not at all, because it is all based on this mechanical approach to the 3 PD array rule. Now looking at this, my final objective being the 15-minute fair value gap right here, which lines up beautifully with the swing low, and the New York Open, which we would go to retest for retracement objectives. That is beautiful, right? But am I really going to hold my trade for almost 7R and not take money out? Never. Never would look for that. So when I don't have a clear objective in the meantime, right? A clear objective for a partial, what do I use? Well, standard deviations. So I'd use my breakers range, plot my standard deviations, find the reversal range aligning with a key objective, right? Which in this case would be the reversal range with liquidity under the swing low. It's in close proximity to your final target, especially when you look at it with hindsight. But that's still 30 handles. And sometimes you can reverse very easily in 30 handles. Now, of course, seeing the result, these two candles did, what is that, like 60 handle range? Pretty much. Little over 60. But you won't always get price movement this far. And you'll be quite happy to have taken a partial at a key level before closing your trade. And as stated, 15-minute fair value gap is the final objective for me. So I would not even have held other than to this level. Even 4 standard deviations, even all of this liquidity below, in my mind, we were not going to go back there. So for me, it was just a clear short and taking profits early, closing the trade fully at our opening range low pretty much. This level aligns with the opening range low. Do we have any questions just about this short before we move forward to the rest of the price action? Oh, I did forget to point out what adds confluence to this trade, as always, is power of 3, yes, but also if you look at the 10 a.m. open, if I enter above the 10 a.m. open, I understand that if my candle is an open high, even if we are going to go back higher, we do need to revisit this level. This is a clear draw short term for me. So after we cross this level, and as I said, I do use these levels sort of like a support and resistance. I'm not scared to use these words with you guys right now. But once we break through this level, and not just close through, I really need to see displacement away. This becomes sort of like a stop loss to me. So I'm not scared to place my trade break even, and that if it returns to this level, it can consolidate for a while. So I'm giving it room to breathe. But if we go back to this level and start expanding higher, to me, my whole trade idea and my idea that the next 4-hour candle will be bearish, at least for the first few minutes, right? After the first hour, hour and a half, then that invalidates my idea and my trade is no longer valid. But with this trade that you would have looked for a retracement, which clearly was a very big expansion since we had a huge consolidation days, huge search and destroy. But you also had SMT at this point. So what is also another reason to take profit, we waited here. Another reason to take profit at this point is also what would have told you that you can now start looking for longs. As we can see, this SMT was not respected. But do you guys see a bullish breaker formed? Because I don't. This is why we utilize breakers. And I'm not saying that every single time the breaker will be the perfect entry. But if we're talking purely probabilities, it is better to utilize breakers in the long term. I am very confident in saying that because I have the data to prove it. And don't worry, it will all be part of the Rice Statistics app, all in due time, right? I just got tagged in general. Let me just double check that. Oh, that's Emil's gifts. Wow. But if you would have just waited for a breaker to form once this idea was valid, and it's still valid once we go all the way down here, even though we went all the way down very near this level, and I do want to gain an accurate measure of this. So let's see how far. 1.25 handles away. There is still order pairing happening here. And if we expand away from this level, I can utilize this SMT as a clear confluence that this is indeed an important law and we will be moving higher. Now, the only thing I don't like is taking entries into lunch. That is the only thing I specifically don't like doing. But if I didn't get a part of any of the moves in the morning, like Matt did, for example, I would consider this long for sure. And if you see right here, just before lunch, you would have had ample opportunity to take profits along the way. And now, in this case, let me just move this aside. The specific long you'd be looking for, well, what do you need? I have my higher time frame point of interest, which is linked to SMT. We are in a deep discount of our range. If we want to talk specifically about higher time frame inefficiencies, I can't go on the daily because there is nothing there for me at the current moment. But we do have a 4-hour order block. I believe that's the PM as well. If you look right here, we traded back down all the way to here, and it's actually this 4-hour order block I wanted to take note of. This was the order block formed from the London session that we use in the PM, which I am also going to be talking about in a second here. 4-hour fair value gap. Is this the example where you showed me? Yeah, the fair value gap going through it. Yes, but we already traded into it, went back out of it. This to me is balanced, so I prefer to use the most recent. But truth is, these arrays give you the same exact information. This is a key area where I would like to see structure telling me to go long. And right on this 4-hour chart, we can actually see very well the big divergence between NASDAQ and ES. Clearly, this was an area with a lot of order pairing going on. If I just refresh that, let me just find the order block. The same level that was used in the morning could be used to add confluence to this trade. Higher time frame point of interest. And here, let me actually note it down. 4-hour order block. SMT, then all I'm waiting for is my unicorn and I can take my trade. Well, where will my objectives be? Well, I'm looking at a trade. For a partial objective, I want to see the range. So I'm going to go on the 5-minute. Now we have quite a bit range, so I wouldn't mind going on the 15 in this specific case. But if I'm trying to be conservative, especially after seeing such a big move to the upside, such a big move to the downside, I'm not going to refer to the current intraday range. Why? Because I'm pretty much trading the... Well, okay, how can I explain this? What you are trading currently is the search and the short profile. So you're trading ranging conditions in the markets. That doesn't mean it's bad. It just means you do have to adjust your anticipations. So in this case, I would refer to the most recent range, which in this case is also the smallest range, and have a very, very conservative objective of just my first 5-minute premium inefficiency in my small range. And of course, I would hold on a runner. This wouldn't be the end of my trade. But, well, I mean, going into lunch, you could respect someone who closed his trade here. But there is still a lot of upside potential, so I would refer to the larger range for example for looking at runners specifically. And if we look more closely at the price action, what do we see? Well, our first breaker block to form is this one. Now, whether you draw this break, here, let me actually change the color. It was pissing me off. Whether you choose this breaker or Well, actually, no. Waiting for the bigger one would have been a mistake in my book. But whether you use this range or this smaller range, who cares? They are both the same. To me, I look at this box and what I see is a consolidation. Consolidation form breakers. I want to see that consolidation. I want to see a rate of that consolidation. And I want to see us show emphasis in going back above. That is what forms a breaker block. And of course, in price action, we have very specific rules to it, very specific guidelines to utilize. But in this case, I just always use the most recent whenever I'm drawing it because that is the simplest. And if I'm going to refer to the standard deviations, I'm going to look at both. Why not? I have these standard deviations, which I understand are a certain sort of probability, and I have these ones right next to it. And I'm also going to refer to the bigger ones to think of more long-term objectives. Reversal, high probability bread and butter. So I'm going to refer to all of these standard deviations. And yes, it leads to me having a huge amount of drawings on my chart, but now I can see that this area is an area where I don't want to see price reverse. And as you can see, we broke through it, went back for a little retracement, and then continued. But before I get a lot more off track, where's my first overlapping PD array? There. It remains the same. There's no inversion fair value gaps up until later. So this would be your very specific entry. Wait until you're trading back into it. And then you have 1 PD array, 2 PD array, 3 PD array. Stop loss right here. All purely mechanical as always. And as I said, very low objectives for me on this trade. 1.45, would this be me taking out half my position? No, because I can't justify taking out half my position before at least 2R. This is not enough returns for me to consider profitability out of it. But I would take off one contract very early, be happy with results, so that in this case, I can put my trade break even and be happy no matter the result. And then, of course, next tech profit for me would be my objective, which was the external of the 5-minute range we were looking at a second ago with this premium and discount. Also aligns beautifully with bread and butter from our big breaker block. Pretty much that's what we could call it in this case. And then I would hold runners up till when? Midnight is always a great objective for any type of move, pretty much returning to midnight. It also aligns in close proximity with the reversal range from my standard deviations right here. Let me just have a little more. These are not being drawn with a lot of care, by the way. And this is on purpose because I'm not using these levels specifically as objectives. I'm looking at these levels and I'm trying to refer to PD arrays within these levels or liquidity within these levels to have a clearer objective. But for me, I am able to frame that, hey, we could return to midnight opening price and then just spike into our reversal range and then continue lower if that is what we're going to do. So if I took profit here once again, I would be willing to hold up until midnight, giving it a few more points to go targets to standard deviations. Now, this is not very pessimistic, right? You see the result and you're like, oh, well, that's picture perfect and whatnot. So whether you took profits here, whether you took profits here, this is how you manage a runner. Our trade would have been here. And that's only, in my book, by the way, that's only if you didn't take the short. Because I don't always recommend trading higher time frame retracements, pretty much intraday retracements, because they can sometimes be hard to spot and hard to navigate through. But if you didn't take part in this, I also think that this is a beautiful trade. So no worries, Matt, if you were scared. Beautiful fucking trade right there. Good job. I would have held on longer though, right? All the way back up to the highs. But as we always say, right? This is consolidation. You never know what could happen. And of course, with hindsight, we can see it went back higher. But just catching a piece of that, and quite a decent piece, even if it's smaller in terms of points, that was a beautiful 3.3R result. And I mean, realized if you took profits early, that looks a little more like 2R realized, right? Twice your risk to reward at the end of the day, not at the end of the day. Very happy with that. Dog making me go for a walk. We'll catch the YouTube vid. All right, Matt. Have fun. Do we have any question, boys? Nice to see you once again, Soldier Boys. Hope we'll start seeing you regularly here. No questions. All clear. Shoot. For analyst Ollie, go for it. We have time, guys. I love doing these calls, right? Tonight was a little more of a surprise, but from the PA of today, I thought it was a beautiful opportunity just because everything was so picture perfect, but with a shitty profile, right? A consolidation daily profile. Pretty much what we did today was consolidate, but SMT, key levels, would have helped you navigate through this day to catch both sides of the range. I'm gonna give you a little bit of time to type out your answer. Don't worry about it. Here, all right. That's actually some sauce. So we're gonna call it here for the recording, so the people on YouTube actually won't get a chance to see this, but they had to be here live. What can I say?